Okay, hi there and welcome to a macroeconomics video. So how might you go about deciding whether a country is enjoying a period of economic success? Well, we've been looking at this in our introductory macroeconomics lessons at school. I wanted to share with you therefore this short video which takes a look at some of the indicators that might be used. Inevitably, the measures we choose to judge whether a country is economically successful and the importance attached to each, that involves making a choice, making a value judgment about what we think is important. Success can be either absolute, perhaps comparing current macroeconomic indicators with a previous year or time period, or success can be relative, for example comparing the UK with Germany, Japan, the United States, China, India, and so on, perhaps choosing one country and comparing with the performance of a close trade partner or competitor. Now, this video is being recorded in September 2020 during a turbulent phase of the COVID-19 pandemic, which has created one of the worst economic and health crises for decades, as the OECD reports in this quote. The pandemic has been an enormous economic shock, impacting both developed or advanced countries and also increasingly emerging developing countries alike. So keep those thoughts in mind, particularly when we think about some of the indicators we might use to measure the success of an economy. Well, the truth is there are many indicators we might choose, and in this video I just want to select a few key measures and hope perhaps that you want to explore further using countries of your individual choice and interest. So here is my initial selection. I think I've gone for 7, but perhaps you can add to and improve my choice. The success of a country in economic terms cannot be measured by just one indicator alone. So the key thing here is I'm going to take you through some big ones: jobs, growth, inflation and trade. But if you want to widen the scope of your investigation, that would be fantastic. And one of the ideas here is to choose a country, choose perhaps a cluster of 2 or 3 nations, and try and get a picture of their overall economic performance. You could almost create a kind of top trumps approach. Let's look first of all at jobs. We know that unemployment is rising in many countries. According to the OECD, the industrial high income countries are likely to see unemployment perhaps double to nearly 10% of the labour force in 2020. No obvious prospect of a significant improvement next year. Of course, the government had their furlough scheme designed to limit job losses. But you can see here that when it comes to jobs and employment, look at the red lines there. There has been already a big fall in employment in the second quarter of 2020, and there are further redundancies planned in the weeks and months ahead. So unemployment is clearly going to be going up in the UK and other countries. I suppose the key question really is how high will unemployment rise in the UK? Here's a chart taking the figure back from 2020 all the way back to 2008. And you can see that the forecast for 2020 is that we'll have an unemployment rate of about 7.5% by the end of the year, getting close to what it was in the aftermath of the last economic recession in 2009-2010. Now, the furlough scheme you may be familiar with, that comes to an end by the end of October, and it's likely then that the pace of job losses will start to accelerate. Second way of measuring how successful a country is to see how fast, how rapid is their growth. We normally measure economic growth by the percentage change from year to year in a country's real national income. That's the value of the output of the goods and services produced in an economy. Crucially, of course, we know that in 2020 the world economy is in a recession. Take a look at this chart. Most years the world economy overall, the global economic system, expands by about 3-4% per year. But in 2020 the IMF is forecasting a 3% reduction in the size of the world economy, optimistically forecasting a pickup in 2021. So growth in many countries has slowed down, has become negative. You can see this by looking at this chart. This shows an index of the level of GDP in the UK economy. And you can see we've had a long, steady period of growth from 2010 onwards, brought to an abrupt halt as the country went into lockdown in the spring of 2020. In the first and second quarters, cumulatively, a fall in output of GDP by more than 20%. Indeed, the size of the British economy fell by 20% in the second quarter of 2020 alone. You wouldn't necessarily judge that collapse in output by what's been happening to the stock markets. Here's the share price index for China, Germany, United Kingdom and United States. Now, some people say actually the stock market is an indicator of economic performance, but of course the price of shares, the value of stocks and shares can rise and fall pretty much independently of what's happening in the wider economy. But look at the blue line here. That's what happened to UK stock prices in the spring of this year. Big fall. Many other countries it happened as well, not as much in China. You can see that share prices have recovered somewhat as we have emerged tentatively from the worst of the lockdown. Another key indicator of economic success is inflation, the annual percentage change in the level of consumer prices, what's happening to our cost of living. These were the countries in the world with the highest inflation rates in 2019. Venezuela, unsurprisingly, came top with an average inflation of nearly 20,000%. It's gone up significantly since then. Zimbabwe second, but notice here quite a few countries have a rate of inflation well in excess of 10% per year, including countries such as Ethiopia and Turkey. Now these are the inflation rates last year for the main industrialized, advanced and emerging countries: India, Brazil, China, etc. And you can see that countries like India and Russia tend to have relatively high inflation compared to, for example, the United Kingdom, USA and Germany, where inflation tends to be at or around 2%. So prices aren't rising very quickly at all. Now, low inflation is a key part of macroeconomic policy making. A little note there on Japan. Japan's prices rising very slowly. And of course, Japan has in the past had periods of deflation. Indeed, falling prices can be economically damaging as well. And you'll cover this as part of your economic studies in the weeks and months to come. Another key indicator is trade. You can measure this in all kinds of ways: share of world markets, competitiveness indicators, general terms. One is simply to look at the trade balance, the value of the exports of the goods and services we sell overseas, minus the value of the goods and services that come into a country. Here's the figures for the UK. The histogram there in a nice dark greeny bluey shows the annual trade balance for the UK, and that shows that we import more than we export in terms of value of about 20-25 billion pounds. We actually have quite a big trade surplus with non-EU countries, but a large and rising trade deficit with EU countries. Other economists say, well, this is fine. We've looked at jobs and inflation and growth and trade. Look at living standards. And one way of measuring that is to say, well, what is the average household income per head of population adjusted for inflation? And if you look at disposable income per head, that's income after tax and welfare benefits. Here's the chart for the UK. This looks fairly positive. Obviously, living standards fell in the last recession a decade or so ago. The disposable income fell from 23,000 to less than 22,500. But then a period of increasing disposable incomes, heading up towards £25,000 in 2019. This is per head of population. But of course, what we really want to know is what's going to happen to living standards in 2020. We know that per capita incomes will probably fall because GDP has fallen 20%. Population hasn't fallen by 20%. Disposable incomes will be hit this year. And this article from the IFS suggests that, in fact, young adults are the group at the moment that have seen the biggest hit to their living standards during the pandemic. Another indicator you might want to choose: we're broadening the net here. We're casting out and thinking about more things to look at is government finances. In particular, two things. One is how much the government has to borrow to pay for public services like education and the health service and defence, and also the amount the government has in debt. Now take a look at this table. Again, lots of data here, but bear with me. This is how much the government has to borrow each month in the last financial year just to pay for their spending. And you can see that cumulative by the end of March 2020, the government was borrowing £56 billion over that year. This is a cumulative borrowing. In other words, it was borrowing about £1 billion a week during the last financial year. Now, keep that figure in mind, that's quite important. Last year, up to March 2020, which we know is when lockdown happened, the government was borrowing about £1 billion a week to help cover the excess between spending and tax. Now, you might be able to hear a yapping dog. I'll carry on. This is what the government is borrowing this year since lockdown. So this is cumulative borrowing. They borrowed 48 billion in April, another 46 billion in May, cumulatively going up to 94. Can you see here already up to July, they've borrowed 150 billion pounds, nearly 3 times what they borrowed in the whole of last year. The government's had to borrow a huge amount more this year because of the pandemic. 2 reasons. One is the government is spending more. For example, the furlough scheme and other policies, including hospitality incentives. But crucially, because the economy's got smaller by 20%, there's been a big fall in tax revenues. So the government is spending more, but taking in less in tax. The result, it has to borrow more, and as a result of the borrowing, it is having to increase its debt. So this is the amount of debt that the government has as a share of GDP all the way back to 1920-21. You can see how high debt was at the end of the Second World War, and you can see here now that UK government debt at the end of July 2020 was over 100% of the size of the economy, 20 percentage points higher than 2019. The first time government debt's been above 100% since pretty much the 1960s. A couple of other indicators. Some people think, yes, okay, these are key indicators to use, but what about inequality? For some people, it's the really key one is the scale and the depth of the gap between rich and poor in terms of income and wealth. Lots of things I could show you. I just wanted to choose one indicator in this video, and that is to look at the distribution of disposable income. That's income after tax and benefits. And on the x-axis, bottom axis, it's the disposable income ranging from 0 through to high incomes. You can see that there's quite a skew, isn't there? There's a lot of relatively high people on relatively low incomes, and there's this long tail of people getting richer and richer as we head towards the right. You can see this by the fact that mean income, just under £36,000, is over £6,000 higher than median income, which of course is the middle value in that frequency chart. So inequality is important, and so too is well-being. Now increasingly we are at a macroeconomic level thinking, well, okay, jobs matter, and so does inflation, and so does the level of the trade balance or what have you. But are people leading fulfilling, happy, worthwhile, socially engaged lives? So well-being is now becoming pretty much more mainstream as an indicator of policy. I've just chosen one bit of data for you, which is the annual life satisfaction surveys in the UK. A question is asked to the sample: overall, how satisfied are you with your life nowadays? 0, you are deeply, deeply dissatisfied. 10, you're over the moon, you're completely satisfied. And you can see that well-being improved actually from 2012. We were coming out of recession at the time, to 2019. There was a noticeable overall improvement in the mean average life satisfaction measure. But we really are keen to see what consequences are of the lockdown of the pandemic and the fallout from the crisis on life satisfaction, perhaps in the December 2020 survey when that finally comes out. Well-being indicators, social personal well-being, health, relationships, all that kind of stuff, our finances, our job security, our anxiety. All of these things now do matter when trying to shape policy. Well, there we go. In our lesson, we simply asked the question, what makes a successful economy? How can you measure whether a country is successful? And what I've done in this video is give you an initial selection of 7 indicators, but perhaps you can improve and add to my choice. I hope you can. What I would really suggest you do is choose a country or 2 countries and go away and find out some data and some information, perhaps using these indicators as your baseline, and get a kind of an overall picture of where a country is in terms of its macroeconomics. And please do head to Tutor2, my website, for some great study resources. Okay, thanks for joining in this video on measuring economic success.